Hello, everybody, and welcome back to Godspeed Today, Godspeed TV. I'm your host, Riley Roseby, your navigator in this AI-infused paradigm shift. Today, we have a fun program. Markets have been selling off, but that does not stop what is happening in innovation, specifically within technology. Now, if you've been here for a few programs, you know I kind of look at four pillars of a paradigm shift, and we see them going back to the Industrial Revolution, back to the Renaissance, and it's energy, communications, manufacturing, means of production, and transportation. Robots, folks. Robots are going to change everything we know about manufacturing, and we're seeing them on display as China dominates the 2025 World Humanoid Robot Games. Now, folks, if you don't know what these games are, let's just call them the Robot Olympics. They were held over in Beijing, and unsurprisingly, the Chinese companies absolutely dominated the field. Here is the Unitree team. They secured 4 of the 26 total gold medals and 11 medals in total. I'm a little disappointed because we don't have that pretty cool medal count like we do for the Olympics. But if you take a look at who's winning these medals, it is all Chinese manufacturers. There's one company in the US that won a gold medal, but really the star of the show was Unitree. And we could take a look at this little video. I'm not sure if we're going to get the audio to work. This is the Robot Olympics, though. Exactly. It's not flawless. So what we're seeing here obviously is crazy innovation within China on the humanoid robot space. But I think the biggest thing is this is a marketing play for China to kind of pull their flag in the sand, so to speak, that they are leading in the humanoid robot race. It's pretty evident. If you guys haven't checked it out, I highly suggest you go just do a little YouTube rabbit hole going down the World Humanoid Games. It's a fun watch, and I really think it brings into reality how close we are to robots. Robots are coming. Like, we see them right here. They're boxing in the corner of your screen. Are you ready? Let's do a little channel check. So I got a buddy from Sedona, and he is over in China. He's been over there for a few months. I texted him a few days ago, and I was like, hey, you seeing a lot of robots just kind of roaming around in the day-to-day while you're over there in China? And he says, yes, there are a lot in China, hotels, malls, all over. Not human-looking ones just yet. I think the boxy wheeled robots with speaking and payment capabilities is the first introduction into society. You seemed to get used to it. Next level is human-looking ones once the first phase is complete. I had Kentucky Fried Chicken delivered to my hotel room. Actually, it's the second time I ever had KFC. Shout out to Matthew Kelly. Matt, I don't know if you're watching this, but we miss you in Sedona. Here's a video he shared as well of him receiving his KFC. Now, we've talked about DoorDash. We've talked about Instacart. We've talked about Serve Robotics. This is the trend, folks. This is the trend. This is the future. We're looking at it right here. It's happening in China. It's only a matter of time before it comes over to the US. Now, why are we talking so heavily about China? Obviously, these robots are cool. It's the sexy headline. It's the narrative. It's the fun zeitgeist of the moment. But the Chinese stocks are looking hot. And here is a performance chart of the China Tech ETF, CQQQ, and the NASDAQ 100 ETF, QQQ, going back 12 months. And in the last 12 months, the CQQQ is up almost 51% relative to the Qs, which is only up about 20%. More than a double on what the Qs are performing. So we're seeing the relative strength over the last 12 months come to light from China. Now let's go ahead and take a look at some charts. We got the daily chart here of the China Tech ETF. Look at that beautiful base. We're testing those highs from Q1 2025. We survived that Trump tariff tantrum, and we're back to the scene of the crime. Now, I love this principle of time frame continuity. When you're looking at multiple time frames of charts to see if those patterns line up, because really that's all we're watching for. We're just looking for pattern recognition. So here's the weekly chart. We could see another beautiful base. It doesn't look as strong as the daily chart. It's not up and to the right as much, but beautiful, beautiful base. This $50 level is very, very significant. Not only is it a big, round psychological number, but we've gotten rejected there in 2022, 2023, Q4, 2024, Q1, 2025. We're on the verge of a breakout. And then here's a monthly chart. It's a little bit clear, a little bit less noisy. You can see we're just knocking on the door of breaking out of this base. Are we going to fly back up to 100, tick all-time highs? I don't think so. Maybe not within the next few weeks. Like, I think we can wade into this trade. But this is a big theme we're watching, right? Like, let's go back up to these robots. These robots aren't going to come and go and be a flash in the pan moment. This technology has some sticking power. And based on these charts, this is a trend that we don't want to miss. Here is a Chinese LiDAR manufacturer. So we've been talking about autonomous vehicles for some time. And for machines to be able to see, we're seeing two different approaches. We're seeing the Tesla approach, which is the vision, the cameras, the sensors, and the Waymo approach, which is the LiDAR. So Hesai Group is a LiDAR manufacturer out of China. Beautiful base, earnings late last week, broke out. Now we're just looking for that continuation to go. And then here's NetEase. And now NetEase is it's kind of tough to lump them into one category and call them like the Google of China, because they're really more like the Google plus the EA plus the Activision, maybe plus a little Roblox. So they're heavily ingrained in the communication space, but more on the gaming side, high engagement side. And look at this chart. This might be one of my favorite China charts. Beautiful, beautiful base. If we look at, I want us to just take a look at this. So if we look at this weekly chart of the China Tech ETF, look at that downtrend that we finally broke at the end of last year. If we look at NetEase, this name just went sideways. We just consolidated in time. We're at all-time highs. Between these two charts, we want to be owning NetEase. Look at this thing. It's pressing on all-time highs. Now, there's been some sell-off in big cap tech land, kind of this US speculative growth. We've seen it across the board. Palantir's down, 20+% from its all-time high. The rocket companies are getting cut. The nuclear names are feeling the pressure. The eVTOL stocks also under fire. And here is the heat map. This is a 1 week performance heat map of the S&P 500. And look at some of those big, ugly red boxes. We can see Palantir down 15% week over week. Broadcom down almost 6%. Tesla's down 5%. There's a lot of red in this technology space. So we're seeing signs of life in healthcare. This is probably just market rotation through and through. And I think if tech in the US is lagging, we got to look across the ocean, across the Pacific to the Far East, and see how tech is doing in China. Tech is looking really strong in China. Maybe it's time to rotate, because here's this Palantir, right? And I took this chart after the close. So big gap down today, flushed right there at the open, and then we retrace that entire move. And Palantir closed 14 points, almost, what is that, almost 10% above its low. It's a pretty significant move. Let's call it 7%, just for the math nerds at home. That's a significant move. Now, I'm not one to be instantly buying the dip here. This is a performance, a daily performance that may result in a reversal pattern, because this was Palantir's 6th down day in a row. It's a little too early to be calling bottoms and start picking up shares, buying off support. But this candle, we got to keep an eye on it. This thing may act as a pivot low. Tesla. We've talked about some weakness in Tesla. We've talked about the incredible base that Tesla's putting in. was down 1.5% today. Not nothing to scoff at, but this range is still intact, miraculously, despite everything that's going on. Now, full self-driving version 14, the latest update for full self-driving, is supposedly coming to market in September. Elon is super bullish about this, so much so that he is walking away from his idea of starting a third party. So, gosh, this was probably 2 weeks ago, 3 weeks ago. We've been talking about Tesla and how the stock won't go down. And every single headline that we see about Elon Musk or Tesla is some sort of negative hit piece. We're starting to see that narrative in the media shift. It's not all out war against Elon. He's dropping his political ambitions. There's going to be a little bit more positivity behind him. We'll see if the price takes note. Folks, the low today in Tesla was 314. That's going to be a price we want to watch moving forward. And then we got Uber Technologies. Now, Uber's been a strong stock. This name is basing right at these highs under 100, under this $100 level. I love these psychological levels because if we know anything about markets, markets are just a collection of human beings. And when you get money involved, you get fear and greed and emotions involved. They are a magnificent, magnificent tool. And humans anchor to big round numbers just like we do. We anchor in the stock market just like we do anywhere else. And 100 is a big psychological level. If you guys aren't familiar with this kind of anchoring bias that we have with these big round numbers, I highly suggest you take a read of Reminiscences of a Stock Operator, kind of the story behind Jesse Livermore. He talks about these big round numbers. If a stock gets to 100, he's looking for it to go to 200. Uber, knocking on the door of that $100 mark. Keep an eye on this one, guys. I don't think the autonomous driving trend is going anywhere. It may have stalled for the week, but we are still just sandwiched at this anchored VWAP going back to late 2021 in the Global X Autonomous and Electric Vehicles ETF. Seasonally weak. That is where we are at in this market. August and September are seasonally the weakest times of the year. Summer is ending. The big boys on Wall Street are taking their last family trips before the kids go back to school, before they return to the desks. We shouldn't be surprised to see some weakness during this time of year. Now, I know JC always likes to talk about the inverse, right? When we see surprises in seasonality that we're not expecting, that's a big sign. So far, we haven't seen that. We saw a little strength. We talked about it last week. Now we're seeing some weakness. Wouldn't be surprised to see the weakness continue. We are going into Fed Chair Powell's Jackson Hole event. All eyes are on rate cuts. Still the talk of the street. But until then, let's just reduce our position sizing and keep an eye on what is really happening. We're going through a paradigm shift. The robots are coming. The flying cars are real. We're talking about a nuclear energy renaissance here in America. It's all happening. That's all I have for you guys today. Be sure to hit the like button, maybe give us a subscribe, drop a comment in the little chat below there. If you guys have any charts that you want me to take a look at, any ideas, feel free to throw them in the comments. Shoot me an email, RileyRoseby@gmail.com. Be sure to get back to you. And thanks for tuning in. I'll see you guys next week.